with international oil prices soaring, concerns about inflation are increasing. This is becoming a factor increasing monetary policy uncertainty. However, although the upward pressure on international oil prices has increased due to supply side factors, there are also factors that can suppress this. The extent and pace of tightening is expected to be determined by the pace of the demand slowdown. International oil prices soar. International oil prices rose by more than 20% after Saudi Arabia, the world's largest crude oil exporter, announced additional production cuts in early June and rose by about 2.3% last week. The price of Brent crude oil futures exceeded $90 for the first time in 10 months last week. Gasoline and diesel sales price at domestic gas stations also rose for 9 consecutive weeks. According to Korea National Oil Corporation Oil Price Information System, OPINET, the average selling price of gasoline at gas stations nationwide in the first week of September recorded 1,751, up 5 from the previous week. The average price of gasoline in Seoul, the region with the highest price in Korea, was 1,831 won, 80 전, up 7 won, 80 전 from Jeju and in Gwangju, the region with the lowest price. It was 1,718 won, 40 전, up 5 won, 50 전. There are concerns in the market about the decrease in global crude oil supply due to Russia and Saudi Arabia's decision to extend production cuts. On September 5th, Saudi Arabia and Russia announced that they would extend their voluntary production cuts of 1 million barrels per day and 300,000 barrels per day, respectively, until December. Saudi Arabia extended its production cut of 1 million barrels per day, which has been in effect since in July until the end of this year. Russia also planned to reduce crude oil exports by 500,000 barrels per day in August, and then by an additional 300,000 barrels from September until the end of the year. International oil prices have recently risen to the highest level of the year due to concerns of supply shortages. The expectations that the impact of this decrease in supply will be greater than the impact of the decrease in demand due to China's economic slowdown is reflected in the price. The temporary closure of 4 major crude oil exports paused since last weekend due to heavy rain in eastern Libya has also distributed supply. In last month's oil market report, the IEA predicted that the growth in oil demand next year would sharply slow to 1 million barrels per day, citing the outlook on economic slowdown, while OPEC maintained its forecast for oil demand growth at 2.25 million barrels per day. Investors believe that oil futures are overbought based on technical indicators and are preparing for possible price decline.